Welcome back. So, like we've been pointing out, there are markets around the region which are showing some green, but it's a little mixed right now. For us, the GIFT Nifty is actually down 40 points. So, let's see which way we go. But lots of stocks to track as always, and our team is standing by with the CNBC-TV18 list of top stocks for the morning. Abhishek, I'll start with you. There's a credit card data that's come out today. How does it look for SBI card?
Well, credit card data, take it with a pinch of salt, given the fact that in the previous month, October, we had the festive season of Diwali, and last year you had Diwali in the month of November. So there is an effect of, the base YOY and month on month as well. However, SBI card has lost a massive market share, which I'll adhere into. Industry-wise, the card issuances is up 11.7% YOY and about 0.3% month on month. The spends are up 5.5% YOY, and they have declined by 16% on a month-on-month basis. So average ticket size is down 5.7% YOY and about 16.5% month-on-month. For SBI card, the card issuances have grown by only 9.8% YOY when compared to industry average of 11.7%. However, month-on-month, their card issuances have grown by 1.2%, while industry has grown by 0.3% only. Spends, they are down 19.7% YOY and about 20.9% month-on-month. The average ticket size, that's down massively by 27% YOY and nearly 22% month-on-month. So in terms of cards, their market share is at 18.7% when compared to 18.5% month-on-month and about 19% on a YOY basis. However, the spends market share, that's down massively to 14.9% when compared to 19.5% that they had on a year-on-year basis and about 15.8% on a month-on-month basis. So losing the market share in spends, I've given a red tick on SBI card today. Back to you.
Thank you very much, Abhishek. That's extremely well put. The industry, you may see some month-on-month declines because of the festival season in the previous month, but SBI has done much worse than the industry. That's a very important point. And methinks, just a deviation, it was not a sensible idea to ward or to hive off SBI cards from the main SBI. You know, HDFC Bank is making money primarily because they've given free cards to the HDFC home loan guys. I mean, you already trusted them with whatever, 40 lakhs, 1 crore, give them a card as well. You know, you must envelop it with the savings data and loan data that the bank has. Perhaps hiving it off was not the best of ideas. But anyway, that discussion for another day. Stocks and news. Upasana, you have a list.
Good morning. First up, let me start with PG Electroplast and Whirlpool. Both these stocks will remain in focus today as both these companies have signed a definitive agreement for contract manufacturing for select models of Whirlpool's branded semi-automatic washing machine. Now, under this agreement, PG Electroplast will manufacture some of the SKUs for Whirlpool at its factory in Roorkee. And mind you that the PG Electroplast is already an existing supplier of Whirlpool's branded air conditioners. Now, what the company has highlighted is both these companies, that is Whirlpool and PG Electroplast, will continue to evaluate the potential expansion opportunities further. Next up is Symphony. Even this stock will be in focus. Company has launched 17 new air cooler models, and what company has said that they have received overwhelming response from its trade partners. Company has received highest ever off-season advance collection for its new products, and most of the revenue from these new models will be recognized in March 2025 is what the company has indicated. Hence, both these stocks will remain on our radar, and I expect both of them to open in green today.
Thank you very much for that. Over to Vinny now for some more stocks in the news.
Good morning. Yes, so let's start with Oberoi Realty. That one is going to be in focus, expecting a positive move here after they've signed a development agreement for 81 acres of land. This is in Alibag, Maharashtra. Now, they plan to build and construct a luxury 5-star hotel or a resort in that 8.6-acre part of the land. And this is around a 3,28,000 square meter land in Raigad, which they're looking to develop. So an interesting move and is what we're expecting in terms of Oberoi Realty going forward as well. Greaves got an keep an eye out on that one. After subsidiary Greaves Electric Mobility has filed for a DRHP. Now, obviously, they plan to raise around 1,000 crores through IPO fresh issue, and there's also an OFS. In the OFS, we'll be seeing Greaves Cotton, obviously one of the top shareholders of Greaves Electric Mobility, as well as one of these investment companies and investment groups, that's Abdul Latif Jameel Green Mobility, that will also be looking to sell some shares in this OFS for the Greaves electric mobility. So keep an eye out on this one. Other than that, we have Orient Pro that is also expected to open in the green. They've announced an expansion into the European markets with the acquisition of Phoenixes, and this is around a 10 million euro cash transaction, which is taking place for the 100% stake in the company. So keeping an eye out on all of these stocks today, expected to open in the green.
Okay, got that. Thanks very much, Vinny. In fact, we'll be chatting with the Orient Pro management to figure out how this acquisition helps them and what the overall business outlook is like. Ashish Rai will be with us in just a bit from now. But let's head across to Rima. Rima, now tell us this whole TRAI recommendation that, bring back the old pure voice packs. What does it mean?
So basically, remember, TRAI is a regulatory body and they can only make recommendations on tariffs. Tariffs are under forbearance, which means that telecom companies have the right to price their tariffs. There will not be any there can be a regulatory nudge, but there cannot be a regulatory diktat on how to price tariffs. Now, what TRAI recommended yesterday is that also introduced only voice and SMS packs. There are many people who don't want data, but because the packs are all bundled together, you get voice, SMS and data, it's forced on people who don't need it. And therefore, there is a need for only a voice and an SMS data pack. Now, telcos have two options, right? You have a current entry-level pack, which includes voice, data and SMS. You can say that I'm introducing another pack, another price point, which could be lower. Now, for instance, the entry-level pack is about 199 rupees, which includes also 2 GB of data, 28 days, etc., 100 SMSs, some voice calls, thrown in. Now, you can say that for only voice and SMS, no data, I'm excluding data, I will price this lower at 150 rupees. Yeah. Now, the risk for telcos is that some of the customers will downtrade and they will lose revenues on that front. But the other option that telecom companies have is that saying that the 199 pack, which is the entry-level pack, remains the same. I'm just excluding data from it.
Give you more voice minutes.
And this has only voice and SMS. And if you want data, then you need to upgrade to the higher value pack. So now the ball is in the telecom companies' court. This is clearly a nudge from the regulatory authorities to introduce more affordable packs. Don't force data on them. But I think the way the street is going to read it, at least for now, till pending clarity from the telecom companies, is that given that we're such a price conscious and there's always been price aggression, that maybe there is a risk that the telecom companies introduce a cheaper variant, plan, and therefore there is that risk of downtrading, which could pressure the company's financials. But
my point would be, bureaucrats in the TRAI don't have the commercial sense that a telecom company will have. Their own money is on the line. So if this was commercially viable, they would have thought of it before the bureaucrat.
But the bureaucrats are thinking of Janta ka bhala.
Yeah, that's and that can only be recommendatory. Yeah. So I don't know whether we should run away with the idea that this can be negative at all.
It may not be. Telecom companies have the right to say that, my entry-level plan now excludes data. It only includes voice and SMS. Take it, because anyway, everyone's already paying for that. That's the minimum amount. Yeah. And if you want data, then you upgrade. And that would be positive for, telecom companies. So it depends, how this plays out. Okay. But interesting development.
So recap now of all the stocks.
Okay, let's do a quick recap then. So stocks with positive news flow are Whirlpool, PG Electroplast, Symphony, Oberoi Realty, Greaves Cotton, Orient Pro Solutions. Stocks with negative news flow are the telecom companies, perhaps. We'll have to see how this plays out, and SBI cards.
Okay, with that, let's go over to Manisha Gupta to get a roundup of all the commodity market action. Manisha, tell us, what should we be prepared?
Well, high volumes and very, very thin trading numbers coming in here. The markets also have, in the meanwhile, seen some strength come back in case of the crude oil prices. That is because the Trump is now threatening to reclaim Panama Canal, accusing it of excessive usage fees. Remember, 2% of global oil flows through Panama Canal. So various statements still coming in from the U.S. President-elect are keeping the markets edgy here. In the other news, we also are looking at some more pressure continuing for the metal prices. The strength in U.S. dollar is putting pressure. But for the gold prices, we still are up by 27% in this year. This, by the way, is the best yearly gain since 2010 that we have seen for gold. Copper is still trading at a 3-month lows. Aluminum and zinc prices still continue to decline. The U.S. PC numbers coming in soft for the month of November are putting pressure. And then the lack of China fiscal support, demand concerns as we are stepping into 2025 also weighing on. So most of these metal prices, which did perform very strongly in the first half of 2024, haven't done that in the second half of this year. And we have washed away quite a bit of gains. But the markets will watch out on what the U.S. does before it heads for the big long weekend here. Very jittery is all I can say, as in the Asian markets right now.
Okay, thank you very much for that, Manisha Gupta. Jittery but thin trades. Most people away on holiday. So in a holiday thin trade, there is likely to be heightened speculative activity. We take a short break on that note, but when we come back, we are going to connect with Himang Jani, who will take us through a lot of fundamental analysis of stocks.